Hi everyone, welcome to my channel Real-Time Economics and Stock Markets. In today's video, we are going to analyze the Nifty 50 index both in the short term and the long run, and also we are going to discuss the bond market and the dollar index to shore up our views on the Nifty 50 analysis. Let me share with you a starking observation on the weekly chart of the Nifty 50 index. This is Nifty 50 on the weekly chart. If we go back a little, we can see that in 2020, post the COVID crash, we saw an uptrend in the market starting from March 20 and it lasted till October 21. So in 18 months of an uptrend, which was followed by a consolidation phase of another 18 months from October to March 23. This was followed up by a breakout and the prices kept moving upwards, reaching the top in October 24. So again in 18 months from March to October, there was an uptrend. Now from October 2024 onwards, again gyrating in this consolidation phase in this channel, and we reached which looks like the bottom for now in April 26. So again 18 months of consolidation. So the next question is, are we going to see a similar kind of a bull run now of 18 months in the coming months, looking at the past two scenarios where we did break out of the consolidation phase, moving upwards in the channel. Well, looking at the current scenario with the ongoing talks between Iran and US, it seems highly ineffectual that they are going to reach an agreement because none of them is willing to climb down on their demands. However, the charts here, they are telling a different story. Usually at the bottom, there is a lot of pessimism in the market, which we are seeing now. So this makes the case of another bull run in the coming few months. Seems to be in the affirmative, looking at the RSI reading, which is oversold at the weekly time frame. If you look from the previous cases, whenever RSI has reached the oversold reading of 28.29, it has bounced back in terms of the prices. This was an exceptional case of 2020 when the prices had suddenly dropped and RSI reached 17. But most of the cases we are seeing that it forms a bottom at these levels. This view is also supported by some other charts, like if you see the dollar index chart. In the dollar index chart, you can see that the dollar index, let's first look at the monthly chart to get a better picture of this. So you can see that the dollar has been rising in the upward channel and it took support, and now it is hovering around this lower side of the channel, broke down and then went up again. So the likelihood is that we are going to see the bear market in the dollar starting soon. The moment this channel breaks down, we will be in a downtrend. This is the downward channel which the dollar is going to take. In the medium or in the very short term, there might be a slight spike towards the upper end of the channel if it doesn't breaks down the last spike, but as of now the chances are bleak. It looks like it is going to break this channel on the lower side and start its downtrend, which is considered to be bullish for the metal sector. Now moving on to the US bond yields. So here also you can see that the bond market has completed 5 waves on the upside, and there again might be a small blip towards the rising part of this channel, the upper end of this channel, and after that we might see the bond yields falling, and there's a negative correlation between the bond yields and the stock prices. So whenever the bond yields fall, the bond prices will rise, and even the stock market follows the same. So all these are also giving us indication that Nifty is poised to rise in the medium to long term. Now let's go back to Nifty and do a short term analysis of what is happening on the shorter time frames. I'll switch to the hourly chart. So on the hourly chart you can see that again there is a 5 waves rise, 1 2 3 4 5 wave rise, and this is followed by a corrective wave. So in Elliott Waves we mark this correction as ABC. So this most likely is the wave A of correction, and then we did a retracement from here. If you can see that we did a 50% retracement of this fall, and again we have started following, so we will mark this as wave B, and now we are looking for a wave C which will take Nifty further down. Probably the first support will be here around 23,500, and if this breaks then we go down and fill the gap further at 23,100. So this is a very short term outlook, and in Elliott Waves we describe it as wave 2. This is your wave 1 followed by wave 2. So once this wave 2 ends, we will again see Nifty heading upwards, and first resistance will be 24,676. So for the very short term we will see Nifty going down, taking support either at this level here or breaking down even further and taking support at the lower level.